Great, guys. I'm here with Tayler Hendricks. I'm excited to take this time and talk a little bit about the market, where it's going. Taylor's a great loan officer. It's been in his family forever.
Yes.
And on top of that, he actually talks the talk. No, but he's actually walking the walk. He's not just saying, hey, go ahead and buy real estate, and he just puts all his money in stocks. He's actually been very involved, even though we've seen our market continue to go up and everyone's crash. You've continued buying stuff. So
Absolutely.
Let's chat a little bit about that. I mean, why have you continued to buy stuff in what people are calling, the all-time highs, record, all this stuff? Let's chat about that.
Yeah. Well, and I think it's interesting that most people, ever since I got in the business, like 6 or 7 years ago, I've heard we're at all-time highs for 6 or 7 years now. So that's the hard part, is I don't think we are. And we bought a couple properties. I know you've helped on them. That we've bought a couple properties this year already. A lot of it is just because we are confident in the market, that I don't think it's going to go down, especially in the rents and that rental market. Because most of our properties we'll put up an ad anywhere, and we've got 100 people in a week reaching out trying to get it. It's nice for me, comforting to know that regardless of, even if the market doesn't go crazy for a year or two, I have people that are currently paying that mortgage for us. So regardless of where that value is, that mortgage is still getting paid.
Great. Let's talk about what I think is really important. And when people think about crash and what's going on, they think about 2008, right?
Yep.
And what they don't realize is 2008 was the biggest crash in the housing market since the Great Depression, right? We've had a lot of other recessions, and two of those in the last 5 recessions, only 2 of them affected the housing market, and one of them was like a little blip. It went down like 1.9%, which is nothing, right? So let's talk a little bit about what some of the differences are, right? So I think ARMs, which are adjustable rate mortgages, is a very big, different one to me.
Yeah.
So let's talk about the value of 30-year money and 15-year money and fixed rate mortgages.
Yeah, I think, it's just so much more secure. Like you were mentioning with the crash, a lot of another reason that you had all those issues were stated income loans and other items. The verification that goes on now is just so much more intense. So I don't think that will happen. And then obviously with the 30 years, 15 years, where the rates are right now, I mean, they're so low, they're below inflation rates and everything. For me, it makes more sense to put it into that, where it's not free money, but it's essentially it's putting it in a great place to, I don't know, you can capitalize a little better in other places.
I agree. Anywhere where you can curb inflation, that's where you want to be. I mean, again, if our interest rates are at 3.5% for 30 years, inflation on average tends to be closer to 4%. So it really is. I mean, it's not free money per se, but it's really, really cheap money. So I like to have my money there. And you talked a little bit about this in regards to, stated income loans and what was taking place there. Talk a little bit about the wild, wild west. I know you weren't necessarily a player in the game there, but your dad was.
Yep.
My dad was. Let's talk a little bit about the differences between how hard it was to get a loan then and what it looks like now.
Yeah. So the verification and everything now is pretty crazy. Back in the olden days, even just before the crash, those stated income loans, most people could call up and say, hey, I am making $1 million a year. This is the house I want. Nothing really else. There wasn't too much. They could be making $1,000 a month, but they said it was $1 million a year, and a lot of times they would just take that.
And what would happen with the appraisers?
With the appraisers, I think it was a little easier to mess with values then. Same thing, there just wasn't a lot of verification. There wasn't a lot of regulations and rules holding them back from giving different values when needed. So cutting to today, I think we've learned from that a lot. Today, it's a lot more difficult. There's so much more. I don't even think people realize half the verifications we do on the back end. We've got so many systems that check for fraud, that check making sure that the appraisals are accurate, that they're within normal range of values. We get way more verification from each client. There's so much that goes into it now. I mean, it's a million times more intense on the verification side, just to make sure that doesn't happen again.
Awesome. Yeah, so if that wasn't clear, it's a lot harder to get a loan today than it was back then.
Yep.
I mean, if you qualify, you can still get loans today. You're getting reasonable loans, but what was taking place back there was people were getting put in situations that they frankly couldn't sustain.
Yep.
And that's what it was called. A lot of this unsustainability caused what was the bubble that exploded. I really don't think we're in a bubble. I think we're in an inflationary market, and cash flowing assets is what's going to ride the wave much better than anything else. That's my opinion. What's your overall take of what you see taking place in the market over the next, 3 to 5 years?
I mean, for me, of course, you don't have a crystal ball. It's kind of hard to always know. But I think for me and our plans, like with my family, I really am in, right? For me, I'm anticipating, I do think it's going to continue as is. Rate-wise, I don't think there's going to be a major change. They have gone up a little bit. We've heard indications that they should. I've heard of new COVID strains and other things coming out. I don't think rates are going to change a dramatic amount. They might change a little, but we're not talking 1 or 2 points higher than where they're at today. But I do think, for me personally, I think housing market's going to continue to increase even in the next 3 to 5. People that continue to say that we're at highs, I think 3 to 5 years from now, they'll be $100,000 shorter than where they could have been.
Yeah. And talk briefly about what deals are you buying?
Yeah. For me, mostly we're, and we've talked about it on a couple of our videos that we've done, but is that just with doing the 10% down investment property, we're really just buying up any multi-units we can, especially with that 10% down. It's really good. We don't need nearly as much cash to be able to get into it. And that's essentially what we're looking at. We're not looking at cash flow very much. In Utah, most people know that's not the case. You can't really do it. But for us, we're more looking at, as long as somebody's covering that mortgage for us, and we're not putting anything into it, maybe $100 or $200 of cash flow just to cover expenses. In the future, that asset is just that property will appreciate, and it's worked out really well for us on all the ones we've done. I think that's what we're going to continue doing.
Awesome. Well, anyway, hope you guys have enjoyed that. It's always fun to talk about the market with people who are actually players in it. I get a lot of keyboard warriors who just tell me I'm wrong. Hey, we're gonna see this and we're gonna see that. And then I always ask, well, cool. I'm always happy to dialogue back and forth. Tell me where you're getting your data from, and we can definitely chat. But I usually don't get a response from that. So, thus is life. As you guys are looking to see where you want to allocate your funds through all this craziness that's going on, definitely talk to people who are actually in the game and who are actually doing it. If you want to, talk to Kevin from 4th grade who's telling you that everything's going to go down, just ask yourself, do you want to have the same portfolio that Kevin has, or do you want to talk to people who have a portfolio that you want to have? So anyway, hope this video was beneficial. I appreciate Tayler coming out here.
Absolutely.
Sharing your words of wisdom.
Always.
If you guys need anything in regards to real estate or in regards to anything in the world of mortgages, refinances, different strategies of how to use HELOCs to buy other properties or anything like that, reach out to us. We're happy to help whatever way we can, and hope you guys enjoyed. Thanks so much.